Welcome to Business Middle East. This week we discuss why gold is losing its luster. And we take a look at the trends for the upcoming period. Last week began with an unexpected drop in the price of gold, losing 4% of its value. Morgan Stanley indicated a worst-case scenario of a drop to less than $900 per ounce and cited China as the source of the decline. China's central bank had revealed its gold reserve levels for the first time in 6 years. They were disappointing and below investors' expectations. This safe haven could now become a source of concern for investors amid a higher dollar and hints that US interest rates will rise. It's led some analysts to wonder if we're witnessing the end of a golden era for precious metals. Let's take a look at last week's trends for gold, and then we'll be back with an analyst's view.
It was a difficult week for gold as prices fell by 4%, reaching a 5-year low. China's gold reserves were revealed as 1,650 tons at the end of June. It was the first time the figure had been announced in 6 years and was lower than had been expected. The Chinese central bank has disclosed its gold holdings ahead of the IMF's meeting in October. Beijing has signalled its aim to join the IMF currency basket. The decline in gold purchasing by China had an immediate impact on the markets. It plunged to $1,090 on Thursday. This came as the US unemployment data hit its lowest point since 1973, increasing the chance that the Fed will raise rates in September. Consequently, the stronger dollar now puts more pressure on gold. It fell even further on Friday to $1,077 after more unwelcome news out of China. Manufacturing PMI fell to its lowest point since April 2014. Gold did, however, rally somewhat on Monday.
For more insight on gold trends and a technical analysis, joining us as always is Nour Deen Hammoury, Chief Market Strategist at ADS Securities in Abu Dhabi. Nour, a significant decline in gold prices last week. What's your analysis of the current levels and the outlook for the next period?
The latest decline is due to the Chinese gold reserve announcement, which came in lower than markets estimated. From a technical analysis point of view, gold rallied during the financial crisis, and that rally lasted for almost 12 years until it peaked at $1,920 per ounce. Since then, the prices have declined significantly. As analysts, we always look at what is called the retracement ratio, which is at 50% from the full rally. Gold reached a 50% retracement ratio of the entire rally, which lasted around 12 years. The 50% retracement stands at $1,087 per ounce. To make it clear, we zoom in at this level and we can see that gold did not break through that support. Indeed, this was a notable decline or a test to this level, but at the same time, gold has since spiked at the beginning of the week from that level, which keeps the long-term outlook positive. However, a break through that support could lead to another decline towards $890, which would represent almost 62% of the entire 12-year-long rally. So traders have been trying to pull their investment from gold funds and gold hedge funds.
Gold hedge funds have descended to new lows. Why?
This is considered normal due to the rising US dollar and the hike in global markets recently. The yield of the stocks and bonds markets is currently giving better revenue than the investor may get from gold. Therefore, traders are heading towards risk assets, bonds and stocks, which are higher yielding than gold.
It's well known that investors move to gold and other safe havens during global economic slowdowns. But have things changed now? What about the situation in the Middle East?
There's an important thing to consider. The value of gold remains the same. The recent decline in gold prices is because of the US dollar's strength, which has affected most of the commodities prices, not only gold. However, traders and investors always look for opportunities to buy with less cost or on lower prices. This is what happened in the Middle East last week. We saw a notable demand across the region, and this is also normal, as happened last time when gold dropped. Also, the recent decline came on the Eid holiday and the end of Ramadan, which was an opportunity to buy gold gifts at lower prices.
One last question, Nour. With a lot of pressure on precious metal prices, what advice or guidance would you give investors?
We always advise our clients globally to diversify their portfolios and not to concentrate on one market or an asset. They can diversify their investments in stocks, bonds, currencies and commodities, which decreases their risk, especially when market volatility increases significantly, just as it did recently with the gold decline and the dollar increased against major global currencies.
Thanks for your analysis, Nour. See you next week. That's all for now. Share your thoughts with us on our Euronews social network using #BusinessMiddleEast. Thanks for watching. Have a nice week.
شكرا لحسن المتابعة، ويتجدد الموعد معكم الأسبوع المقبل.